Welcome back, everyone. Wow, the crypto market is just a sea of red today. We've got a major security shock rattling the DeFi world, and it's sending fear all through the markets. But underneath all that panic, there's a huge regulatory shift happening that could signal a massive long-term opportunity. So let's try to break down the chaos and find some clarity.
And as you can see, the market is just bleeding out. Bitcoin is down, sliding back towards that critical $107,000 mark. But look at Ethereum. It's taking an even harder hit, down over 4%. And there's a very specific reason for that, which really gets to the heart of what's going on today.
Yup, fear is definitely in the air. The Fear and Greed Index confirms it, which brings us to the million-dollar question for this whole explainer, right? Is this the moment to panic sell? Or is this one of those rare opportunities to buy in just before some incredibly bullish long-term signals take over?
All right, so let's get right into it. The main reason for all this fear is a massive security breach. I'm talking about something that has sent shockwaves through the entire DeFi space, and it's all stemming from one major protocol. $110 million. That is a huge number. That's how much crypto is moved from the balancer protocol and what looks like a major exploit. And listen, a number that big, it doesn't just hurt one project. No way. It shakes investor confidence across the entire market.
So you gotta understand, this isn't just about balancer losing a bunch of money. This is about something much bigger. We're talking about systemic risk. See, when a protocol that important gets hit, it's like throwing a huge rock into a pond. The ripples just spread out, and suddenly everyone starts questioning the safety of the entire DeFi ecosystem.
And this, right here, is exactly why ETH is getting hammered so much harder than Bitcoin. You know, almost the entire DeFi world is built on top of Ethereum. So when DeFi gets a black eye, Ethereum feels it the most. This leads to this massive sell-off in ETH and all the altcoins connected to it. Meanwhile, Bitcoin, well, it's kind of standing off to the side, looking more like a safe haven in the storm.
Okay, so here's the bottom line. We are at a make-or-break moment for Bitcoin's price. $106,000 has been a key support level, a real line in the sand. If it fails to hold this price with all the selling pressure, well, we could be looking at a much longer, sideways grind for a while.
But hey, even with all this fear, not everything is in the red. It's pretty amazing, right? Smart money always finds a home. It just flows towards assets that have their own strong, independent story going on. We've got ASTER rallying just on news of a personal investment by CZ. And then there's Zcash, which is gaining because privacy is suddenly back in the spotlight. It just goes to show there's always a compelling story somewhere in the market.
Okay, so let's pivot a little bit here. An exploit like balancers, yeah, it's exactly the kind of thing that spooks investors. But here's the twist. It also shines a massive spotlight on the exact risks that regulators are finally starting to tackle. So while the short term is all about fear and chaos, the long-term outlook's actually looking a whole lot brighter, all thanks to a major shift on the regulatory front.
And folks, this quote right here, coming out of the US, is a potential game changer. The new chair of the SEC, Paul Atkins, has basically signaled a complete 180-degree turn from the previous administration's often hostile stance towards crypto. This is exactly the kind of regulatory clarity the industry has been waiting for.
I mean, think about it. The old SEC was trying to jam a square peg into a round hole, forcing crypto into these ancient securities laws that just didn't fit. The new approach? To build a framework specifically for digital assets. This shift from being an adversary to providing a clear rulebook, well, that's a massive bullish signal for institutional investors who need clear rules before they can commit serious capital.
And it's not just the SEC. There is massive momentum building behind stablecoins. Huge institutions like Fidelity believe they could become the actual backbone of global money transfers, offering near-instant settlement and incredibly low fees. This isn't just some niche crypto product anymore. It's being eyed for mainstream global finance.
And we're seeing this happen all over the world. In the US, you've got the Genius Act, trying to create a clear federal framework for stablecoins. Meanwhile, over in Europe, their MiCA framework is already live, letting regulated firms like Swiss banks expand their crypto services. I mean, this is the groundwork for mainstream adoption being laid, brick by brick, right now.
So, what does this all mean for your strategy? How do you balance this short-term fear with all this long-term optimism? Let's break down a potential playbook for navigating the storm.
Okay, in a market this wild, managing risk is everything. Number one, think about reducing leverage. We're in a highly volatile acceleration phase of this bull cycle, which means things can get crazy fast. Number two, you have to reevaluate your DeFi risk. The balancer hack is a harsh reminder that security is never a given. And number 3, consider your Bitcoin allocation, because right now it's acting as the market's safe haven.
And you can see why right here. Bitcoin's dominance is hovering near 60%. That means it's capturing the majority of all the capital in the market. In times of uncertainty, money flows to the perceived safest asset, and right now, in crypto, that asset is Bitcoin.
Now, looking ahead to tomorrow, November 4th, there are 2 key things you need to watch. First, that Bitcoin dominance chart. If it gets rejected at this resistance level and starts to fall, that could be the big signal for new altcoin season. Second, the U.S. jobs data is coming out. That's a huge macro factor that could have a major impact on what the Fed does next, and that could swing the whole market.
So that's really the story of the market today, isn't it? You have this short-term crisis driven by the balancer exploit, clashing head-on with a massive positive shift on the regulatory front. I think the key for any investor right now is to see both sides of this equation clearly.
And that, of course, leaves us with the big question. Will that critical $106,000 support level hold for Bitcoin? Is this the floor before those long-term fundamentals take over, or is there more turbulence ahead? I really want to know what you think. Let me know in the comments below.